Good morning. This is Axel Merk, President and Chief Investment Officer of Merk Investments. I will give you a quick rundown here, several things to cover. First, before I get started, as you may be aware, especially on the YouTube channel, we don't accept comments, and it has to be done manually. So sometimes I do get a comment, and the comment was that. That we should be showing charts. And the reason why we don't show charts and the reason I don't accept comments is because everything I say is regulated. I am registered with several different regulatory authorities and all that fun stuff. And so my agreement with my compliance is that I give here open free speech here. But the moment charts are introduced, they have to be reviewed and so forth. So putting them in a live environment is very difficult. And so similarly, part of the reason I don't have comments on YouTube, for example, is because they can't look everywhere for things to come up here. That's also why I don't discuss products, for example. I cannot discuss products in social media. And so those are just part of the kind of the ground rules here. And we do have, if you do like charts, we do publish research books, merkinvestments.com/research, where we publish a lot of charts. And we do also give a video commentary on those charts. On occasion, I might do that here as part of this forum. So I might use our research chart book tomorrow to make some live commentary. So on occasion, I might do that. A few things I want to cover. First, just the markets. If I look at that here, Eurostoxx is down at 1%. Europe is down between a little bit and then some more. Asia was up. Kind of flattish for the most part. Otherwise, the Dow is down 110 right now, but the S&P futures are down 275. The 10 years up 3 ticks. The long one is down 3 ticks. The 3-month Treasury rate is at, if I see this correctly, at 11 basis points. Yes, and the 3-month LIBOR is at 38. The Fed funds futures. The Fed funds effective rate is at 5 basis points. If you look out the curve, the market is not pricing in negative rates right now. Dollar is broadly weaker with the exception of the yen. Strongest currency is the New Zealand dollar, followed by the NOK up. The New Zealand dollar is up by 90 basis points. A few things to mention here, and I'm going to keep it tight because Powell and Mnuchin, I believe, are speaking this morning. And so a few things to mention here. One is there appears to be a little bit of a tit for tat in Australia. Australia demanded that China investigate the origin of the virus, and China imposed the tariffs on barley imports, if I got that correctly. So not iron ore, barley, but still. People flexing their muscles here a little bit, and of course, there's all kinds of indirect ways you can escalate some tensions in the background. That's not very promising to see that sort of tension escalate and see Australia obviously very dependent on iron ore exports, in particular to China. So we'll have to see how that goes along. Then lots of news out of Europe. One thing that came out yesterday but hasn't gotten traction until now, Merkel and Macron appear to be agreeing or have agreed that joint EU debt might get issued on a quote-unquote temporary basis. And that is to aid some of the southern European countries. That is huge news if that were to happen, because if you do have joint debt issuance, even if it's just quote unquote temporary, that would kind of complete the union more fully. In the U.S., as we are all aware, there is federal debt issued. There's already talk about a European benchmark bond. Italian bonds were rallying and so forth to. And again, this is not investment recommendation on any of this, but that would be huge if that were to happen. I would say this: if you say that the U.S. temporarily went off the gold standard in the early 70s, I would think that's a kind of a similar type of moment. And pardon these comparisons, but I do think that may well be the case. On that note, talking about gold, spot gold is up $5 or 1/3% at 1738. Gold futures are up $8 at 1742. Let me briefly talk about commodities here more broadly. Well, first on the numbers here. West Texas up 3.9% or $1.20 at $33, and Brent at $35, up 1%. This morning, I heard a discussion on Bloomberg Radio that was kind of poo-pooing commodity investment. And by all means, I'm not making investment recommendation here to invest in any commodity, security, derivative, or anything like that. But it was pretty much saying, hey, if you invest in commodities, you'll never make any money, and it has no place in the portfolio. The You always got to be careful, first of all, who says these things. If you don't have the capacity to invest in certain things, you usually poo-poo it, saying, "Hey, come to me." And so people are talking the book, no matter what. That's one thing. And the reason apparently is because these are cyclical industries. Well, guess what? A lot of investing is cyclical. And guess what? Yes, I mean, the timber was singled out, for example. Again, I'm not recommending you invest in timber or not, but yes, if you invest in these markets when they're hot, odds are you might be overpaying a little bit. But at the same time, I know people who have invested in timber for generations, right? It is a business like any other business, and it's just that if you're a day trader and you don't know what you're doing, maybe you shouldn't touch it. And so these industries are important industries. They need financing. Some of them do, as many others do. Um, don't expect, yep, just because a certain topic is hot, you should jump on that right now. Just any investment warrants its homework. And just because, for example, tech stocks have been going up and up and up and up. Well, most of them, or many of them, are based on an advertising model. And because of the shift to online, they've been doing well. But look forward 20, 30 years, and there'll be cyclical industries like many others. And so they just happen to have a much longer ramp up phase. And so to just outright ridiculing many industries does not seem to be appropriate to me. Um, and I'm not suggesting you day trade them and so forth. But if you take Warren Buffett, for example, he looks at many things as a lifetime investment, and that's not bad, right? Because not everything it just always goes up. It just doesn't happen that way. And because of the volatility in the commodities, you see that. And of course, you do have to worry about other things as well, because a commodity, I mean, you've seen it with oil, right? Especially if you were to buy a derivative, that the small print matters, where you have it delivered, the storage costs and everything, that you may not be aware of. And so should many retail investors maybe stay away from these things? Sure. But to ridicule entire industries, to say, hey, this is all dead money and shouldn't ever touch it, it's sad. And part of the reason this is sad is because this goes to the broader point, right? When a 10-year, we have the 10-year at 72 basis points, in some countries it's negative, that means there is no long-term investments worth pursuing. And this poo-pooing of any commodity investment, I kind of goes along those lines. We need to have people make long-term infrastructure investments, not just government on occasion. And it cannot all go into social media where you have instant gratification. And so we need to provide a framework where those sort of investments are worth pursuing because otherwise we'll be just chasing the Fed, right? I mean, in today's world, we chase the Fed because they control everything. They are the lender of first resort, the lender of last resort, and so if that's the world one wants to be in, sure. But I'd be much more comfortable, quote unquote, ridiculing that because there's something seriously wrong with that than people investing in real assets for the long run for the right reason, right? Again, this isn't an investment recommendation. A few other things. ZEW, the sentiment on outlook indicators have are turning more positive in Germany, for example. And so some numbers are ticking up. Housing numbers were bad today. No big surprise there. Much of the rest of the world is trying to figure out a way to open up. In the US, it's much more of a checkered approach. And so depending on the mood of the day, the glass is half full or half empty. But in a half full mood, I'm wishing you a good day and talk to you soon. Bye.